Good morning, Jags. This is Fahad. Today is Monday, June 22nd. What's up, gang? How's everyone doing?
Pretty good. How are you guys doing?
Doing
All
great.
right. Excellent. Hey, Jay, you presented a fantastic bull case on Garmin
hmm
over the weekend, just yesterday, Sunday, that is. And
Right.
the stock has a very nice technical setup as it finished very strong on Friday with a hammer reversal candle at the session highs. And I'm looking at this chart. This thing is set up to basically take out this VOP resistance through about $100 per share. And if it is able to do that, then I think we're going to see new 52-week highs, possibly goes to 105 to 110 in very short term. A very strong candle on Friday on very heavy volume, although I think it was driven by quadruple witching as well. And for those who missed, who haven't seen Garmin bull case that Jay presented yesterday, which went out in the weekend research, you can read it. Lots of fantastic stuff. It's discovered over here what we're seeing in terms of monthly downloads, a lot of channel checks, and all that fun stuff. So, with that said, though, I want to share some news that caught my attention over the weekend. Did you see this, Jay? In, Inside the envious plan to use a smart technology and big data to keep players safe from coronavirus. Let me just explain what I'm seeing, not just this, but rather actually a couple other tidbits of information of similar magnitude. Um, Basically, the smart ring maker, Aura, you probably heard of that company, Aura, is back in the spotlight with the NBA's plan to equip players with the wearable health devices to monitor temperature, respiratory function, and heart rate. Aura is pretty well-selling product everywhere. Now, this is not owned by Garmin, but I'm just giving you some highlights of the industry here, somehow it could also actually benefit Garmin for the same trends. Similarly, Las Vegas Sands, which owns the Venetian and the Palazzo in the on the Strip, is announcing that it's going to be purchasing 1,000 Oura rings to early detect illness, and has plans to equip all 9,300 employees of the initial test if the initial test goes well. So there could be as much as, this is on the Financial Times. You need a login to actually read the story. As many as 10,000 Aura rings could be coming. And if it's just Venetian and Palazzo, those two casinos, then what is to say then the entire strip will actually adopt the same measure where every employee will be required to wear some sort of temperature monitoring rings, and other health checks and such. Moving on further, similarly, Universal Studios is also going to be spending $5 million to monitor actors and crew working on the final production of the latest Jurassic Park movie that is expected to come out. And that's just a partial production for one movie. It's becoming more obvious that networked wearable sensors will be the route every company will take, and most people will want them for themselves as well. And so the logic goes that as wearables go deeper into becoming fashion jewelry accessory, they will be enormous market, quite frankly, and quite possibly $1 billion of annual units of anywhere from hundreds of dollars to thousands of dollars that we see currently right now. And that also is positive for a lot of semiconductors and sensor companies that make the chips that go inside in these wearable devices. So, for a long time, we've actually looked at Garmin and Apple and all these wearable device makers, as basically carving out their own niche, but we have actually never really considered them in the context of how COVID is going to be changing that mix potentially. So I see these news from Universal Studios, from Las Vegas Sands, and from the NBA that's in front of you. Maybe we're underestimating the potential here for Garmin. What do you think?
No, I could definitely see that. And if you bring up that screenshot or the weekend research, I mean, they have multiple segments, and from health and fitness to marine to outdoor. I mean, the wearables that they have right now, and the download data that's out there. Um, it remains strong. And if you want to go back further, I covered it in a behind the numbers write-up after their last earnings, and really the focus there was on the fitness category.
Yeah.
So definitely something to be excited about.
Yeah, and these charts, the Garmin Golf monthly downloads, and golf is not even actually fully back yet. I mean, PGA is just starting to get back into the rhythm. These numbers are already taking off quite significantly, which tells me that it's not really all tied to sports anymore. It's all about people simply, having the band on their wrist just to be able to check temperatures, monitor their health, and all of this. So there's definitely a move here. And frankly, when you look at from a valuation standpoint, this stock is actually not expensive at all. I think it has about $4.50 to $5 earnings power. It's trading in 98. It's less than 20 times PE. The company also pays dividend and such. So one to watch. Maybe we're underestimating the true potential here. Could really run. So just wanted to add to that mix. The second stock I want to cover real quick is, hey, great job on Sherwin Williams.
Mm-hmm.
That's another big one. Should be. This stock closed around 584 on Friday, and SHW is going to be opening slightly higher. So that's a good sign if you were not able to catch the trade or early on, but it's going to open slightly positive, maybe $5 higher and such, with just about 1%. But there's a setup here technically for a breakout after a big consolidation, and likely it moves above $600 per share and makes its way to new 52-week high. Now this is another one that Jay had covered. Let me bring that up real quick. In the weekend research, that was right.
Yeah, it was 2 Sundays ago now.
Yeah, 2 Sundays ago.
So June 14th.
June 14th. So let me just bring this up. Here you go on the weekend research. And if we pull this up, we'll see what the bull case for that was. And, same thing, basically the channel checks were showing that the second quarter is running quite strong. Q2 residential repaint comps will likely fall, but they will be driven by exterior and such. And then it was supposed to basically get extremely better and better with the home residential, recent checks continuing to come better than expected. Positive shift from independent distributors and dedicated paint stores towards big box home centers. So this is a tailwind for Masco and Sherwin Williams, Valspar business as well. So while Q1 was very, very soft and Q2 started slow, but Q2 towards the end continues to be better and better. And we discussed all of this on June 14. And now this morning, the company is providing an update on its outlook, and it is it is much better than expected. I was just pulling this up on my screen, and I think it's covered in the first read also, right? Probably. So here it is. The company is providing the Q2 guidance this morning that on a segment basis, the Q2 net sales in Americas Group are expected to be down by high single digits, which is significantly better than what they were previously expecting, which was double digits, mid-teens. But on the other hand, the Consumer Brands Group is expected to be significantly above the high end of the previous guidance. So that's a significant improvement there. And as a result, the company is saying we are raising our second quarter sales guidance given our ability to capture and serve greater than expected demand in North American business markets. So I expect, based on these comments from Sherwin Williams this morning, we're going to see a breakout in stock as well through $600 per share, and it likely moves higher all the way up to $625 and such. And the last thing I want to cover real quick is just a refresher of this stock that we discussed on Friday in the chat room called AKAM. I continue to really like the technical setup over here, but it needs a push. So I want to wait until we have a clear signal before we take a trade into this one. So there is a nice wedge that is forming, with the stock making higher lows and lower highs. And if you layer on top of it Bollinger Bands, those are starting to tighten as well. Naturally, if it starts to break down through $99 per share, then the setup is void. But on the other hand, if it starts to break out through 103, 104, then the setup is in play. And so one can capture the move on the breakout. Just want to quickly discuss it. The setup is pretty good over there. It's on my watch list, and we covered this last week. Here's another chart, the same chart, but the one that we covered in the chat room on Friday. I mentioned that the company actually posted earnings last week, which was rather pretty good, but it was taken by the street with a lukewarm reaction. It hasn't run as good as Fastly or Cloudflare, that are new players in the market, but there are clear signs of a strong growth emerging. The company posted $764 million in revenues versus $749 million estimate, which was driven by broad-based increase in OTT video traffic. The cloud security revenue was up very strong, up 28% year over year, which beat the estimate of 25% estimate. And lastly, the company mentioned that they have added a lot of new capacity in 2019, so it was prepared to benefit from the surge in network traffic during COVID shutdowns. And a lot of those shutdowns, COVID-related shutdowns, are sticking still with the network traffic this morning. So lastly, the Q2 revenue guidance was about 140 basis points above the consensus view, and margins continued to hold up as well. So I think that the read-through for second quarter was pretty strong when the company posted earnings, but the stock has been rather sluggish. Let's see if it catches some bids on above 103. This could run. So I'll be watching this very, very closely. That's it from me. Jay, what's up? What do you have on your list?
Hey, what's going on? Okay, so keeping with this health and fitness outdoor theme, I wanted to talk about Peloton as the first stock, PTON. As we've shown in first read, Stifel is out raising their price target to 62 from 55. The upcoming quarter, which will be Q4 for Peloton, the quarter to date Peloton app data indicates nearly 1.2 million monthly active users, and this compares to just under 1 million from Q3. The One Peloton web traffic also remains elevated, Stifel noting that it has grown 150% in recent weeks. Social followers also from Instagram have also trended well quarter to date. Looking at what's called the order to delivery window, those numbers remain elevated, approximately 8 weeks to get your Peloton product. And this should continue for the simple fact that the company just started shipping treadmills again in certain locations, and this is ahead of Stifel expectations. Also, in other gym news, you have Gold's Gym closing down 30 locations. You have 24 Hour Fitness declaring bankruptcy and closing 100 locations. So these order to delivery numbers should remain elevated in the near future. And then lastly, a small part of the business, international. Like I said, small part right now, but the recent app data that Stifel has collected shows that the daily download momentum has continued to date in June with quote unquote exceptional strength in the UK. And they just launched their digital app last week in Germany. So we'll need to wait a little bit on that to get more data, but international is promising. So that's Peloton.
That's pretty impressive. I mean, it's so many big cities over here. I'm looking at all of them. That's a long lead time, long delivery time for all of them. Definitely pent up demand there. And until this thing starts to shrink to more like real-time purchases when it's immediately available, there's an easy argument to be made that there is no inventory problem here and the margins should remain steadily higher. So that's very impressive.
And then very quickly, B of A has a leisure note out today, just highlighting that according to their credit and debit card data through the week of June 13th, spending on the likes of golf, marine have continued to accelerate. You know, golf was up 30% in June versus 19% in May. Marine was up 15% in June compared to 3% in May. You know, this correlates to what we talked about in the Garmin write-up, just strong download trends. And I actually plan to talk a little bit more about the golf industry in a homepage write-up, which hopefully I'll have later today.
Excellent. We're looking forward to that write-up on homepage. Should be published today or tomorrow, and we'll circulate that to everyone. Great stuff, man. Awesome. Chronicle, what's up?
Morning, Fahad. Been looking at used car sales and prices. As we all know, the used car market is far larger than the new car market. In fact, the used car business is more than twice the size of the new car business. Americans purchased more than 38 million used cars last year, while less than 18 million new cars were sold. But what I want to touch on this morning is the Mannheim Used Vehicle Price Index, which, believe it or not, hit a record high this month, up 4% year over year and 7% month over month. Benchmark was out with some checks and commentary saying inventory levels have been too low because fewer used vehicles were on the market in anticipation of lower demand from COVID-19. This matches up with what CarMax management said in their earnings last week with regards to how fast they are now ramping up their inventory levels. And so it was a combination of fewer trade-ins and less buying at used car auctions, followed by unforeseen rebound in demand, which was what caused this spike in used car prices. Will this last? I don't know. This could be a temporary spike from pent-up demand, or it could well be a secular trend where people keep buying used cars for the rest of the year. But I don't think the trend is going to turn on a dime either. So I think there's still room for a long trade here in used car dealers as well as car parts suppliers. That said, I would still avoid the car makers because there's still evidence of inventory buildup among some of the new cars, particularly how utilization rates and production downtime numbers of the European car makers continue to be worse than long-term average. So I would avoid Ford, for example, as they have a lot of exposure in Europe. So several names I've been watching, including Lithia Motors and Group 1 Automotive. Carvana would normally be a decent choice, but I think that name has run up too much and needs to pull back before it becomes a buy. Personally, I like Group 1 the most.
What's the symbol for?
GPI. And I'd be a buyer if it pulls back to $60, targeting $80. The company makes roughly 3/4 of its sales in the US, and their used car and parts segments represent more than half of profits. So I like this name because they have a more highly leveraged balance sheet among their peers, which implies more upside for the shares in good times. This is just a trade after all, not an investment.
Good stuff. My personal technical view on this would be to wait until it goes to 56, 57. That's where the major VOP support comes in. Basically, that was the previous breakout level on high volume. Not sure if it will come in that far. It would require possibly market pullback for this to come in that low. Closed at 64 on Friday, so we're talking about 10% pullback before an entry, but we'll certainly keep an eye on this one. I'm surprised that we're seeing such a dramatic spike in the Manheim Used Car Price Index. That's a very, very quick, sharp recovery. And naturally, Carvana, which has been a favorite of anyone to play this trend, has been the one that has clearly shown the best trend and momentum, in favor of that. So good stuff. Avo.
It's not surprising. Well, maybe a little surprising, but we did cover a little bit the car price, not necessarily the car prices, but the used car market, because we talked about this a little bit, or at least I did, saying that people are trying to avoid mass transit, then they're going to buy something to get around. And I think used cars is the way they're going because of the prices. All right, what I have here this morning is, I thought I was the only one, but Jay actually covered this on Sunday's analyst commentary update, which I just noticed now because I didn't.
What's the stock?
INFN is the ticker.
INS?
No, IN.
I got it. INFN. Okay.
Infinera, and it's basically the 600, 800G cycle that would be upcoming, and I just sent you the note there. It's a commentary by MKM Partners research firm. There was also previous to that a bullish note out in mid-May by Needham, covering about the same thing, but this is a more recent update that shows channel checks around their 600 and 800G products have improved meaningfully since the first quarter report that was out mid-May. So their outlook going forward appears to be pretty positive here based on checks. Now, this is one of the two companies that are doing 600 and 800G. The other one is CIEN, which has run up as well. But I think if I kind of read through, it appears to be room for more than just one player. So I'll just send you the second part here too.
Our favorite has always been Sienna to trade
Yes.
this, and we have actually gone in and out of that trade multiple times. My personal preferred way would continue to be Sienna, because we have been tracking channel checks very closely in Sienna literally for the last whole year. And while the stock at times has been choppy because there have been some concerns around margin from various analysts, but then recently it emerged as a clear winner, and the trend proves that. And you know what? Looking at this chart on Sienna, this has a potential yet another setup after a month-long consolidation for yet another breakout. So I'll be keeping an eye out on this one. Very nice trend, a trend of higher highs and higher lows. If you had to pick one, which one would your be favorite as a high beta play, Sienna or INFN?
Probably go with Sienna.
Yeah.
I think they're a little ahead in the 800G market, but I wouldn't discount Infinera having a good run up either.
Yeah, sounds good. All right, great coverage today, guys. Love it. Lots of great ideas. Thank you, everybody, for joining, and we will see you in the chat room shortly.